Hello, I'm Rachel Rodgers. Thank you for joining me for another episode of Rachel Rodgers TV. Today we're dealing with an age-old question that's asked by many small business owners because the answer is often confusing. I'm going to try to make it as clear as possible for you today. And the question is, how do I know if my worker is an independent contractor or an employee? As with many things in the law, there is no one thing that can clearly define whether your worker is an independent contractor or an employee. Instead, you must look at the entire relationship that you have with your worker to determine the degree of control that you have as an employer. The rule of thumb is, the more control you have, the more likely you have an employee and not an independent contractor. So the IRS breaks down a worker relationship into 3 categories. Let's look at them. The first is behavioral control. Behavioral control looks at whether the business is directing and controlling the work that's being done and how it's going about being done. An example of this is the level of supervision over the worker. For example, are you directing exactly how the work is going to be done for the worker, or are you deferring to them because of their level of expertise? Another example would be, are you providing specific training for the worker so that the work is done in a very specific way? The second thing the IRS looks at is financial control. Financial control is looking at whether the business is in control of the costs associated with the worker's job, or if it's the worker who's in control of those costs. For example, does the worker have their own tools that they use to perform this work? Does the worker advertise their services to other clients and have other clients who they're doing similar work for? Also, does the worker get paid on a weekly basis, or do they get paid based on milestones in a specific project? Finally, the last category that the IRS is going to look at is the relationship. They're really just going to look at the different facts that determine what is the relationship between the parties. For example, does the worker get benefits such as, a 401k or health insurance? Is the relationship for a specified period of time or ongoing? And also, is the worker performing a key aspect of the company's business? So these are the factors that the IRS will be looking at when determining whether your worker is an independent contractor or an employee. And again, the general rule of thumb is, the more control you have over your worker, the more likely you have an employee and not an independent contractor. So if you do hire independent contractors in your business, be sure to have a contract that clearly outlines the nature of the relationship. Now that we've discussed the differences between an independent contractor and an employee, let's talk about why you should care. If you misclassify an employee as an independent contractor, you may be subject to years' worth of back taxes and penalties. Couple that with the fact that sole proprietors and single-member LLCs are more likely to be audited by the IRS, and now you know why you need to pay attention to this issue. For more information, you can check out this great site, taxreceipts.com. It has a lot of information on taxes for small businesses put together by a friend of mine who's a tax attorney. His name is Kyle Durand. You can also go to the IRS's website. They have a wealth of information. Just use the search box to put in whatever you're looking for. And also, of course, always contact a local attorney if you need help figuring out whether you have an independent contractor or an employee. So that's all I have for you today. If you found the video useful, please share it with your peeps. And remember, if you have a question for me, use that big blue button below to send it to me, and I'll answer it here on Rachel Rodgers TV. Thank you so much for watching, and I'll see you next time. Bye-bye.